All right, let's begin. So what have I got for today? It's NASDAQ. We are going to be discussing NASDAQ, a long on NASDAQ. So when you look at the NASDAQ chart, or rather when a trader looks at a NASDAQ chart, the first thing he sees is this all-time high that was deviated and the market corrected, sold below that. Okay, and this could have been the entry point for a lot of shorts. And the weekly opened there. Even today it was quite down, but it's been bought back up once it took out the last week's low. Okay, so I've gone long on NAS. The setup looks like this. Yes. So I went long there, expecting the stops below this low to hold. Why have I done so? Okay. First things, trend. High, 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 low, high, high. High, low, high, high. Attempt of a low, low does succeed in that, but ends up creating another higher high. So that's an uptrend, right? And so far the uptrend is intact. The only way the uptrend breaks is when the market breaks below this low. Okay. So that's one thing, the trend. Secondly, people love to be a contrarian, right? So and these contrarians are good liquidity. Okay. So anybody who thinks this is a good short with a deviation is, in my opinion, a contrarian because he's denying the fact that this market's been in an uptrend. It has been accumulating below this previous all-time high, and this could be a very valid breakout with the market holding on to this big breakout candle and continuing further up from there. Well, the market might not, and it could deviate and fall all the way down. But yeah, I don't think it's going to do that. I think the trend is going to be kept intact. There's no reason for the market, unless something happens on the macro side, there's no reason for the market to deviate and break back below this low. Now, let's have a look at pure price action. So we have three white knights. Very common pattern. You could call it three white knights. You could call it a gap, a liquidity gap, or anything. In this scenario, right, when the market deviated below this black line, a lot of short stepped in, and even plenty more would have stepped in when the market broke below the previous week's low. Since we already have these three white knights or a liquidity gap, we can bet on the low of this candle to hold, right? Or even on the low of this breakout candle to hold and expect the market to reverse. And when we get back above this black line, long step back in, and hopefully that's it, and we get a new higher high. So I'll have two targets for this. Number one is above the black line, and number two is a new higher high. Okay. So two targets for this last long. And I'm gonna give it about 2 to 3 attempts before I give up on this trade. So currently it's just a scalp position, but if I have to look at it from a swing person or rather swing trader's perspective, I would have gone long at the same place. Okay, maybe I would have laddered my entry. So entry one would have been there, entry two would have been at the sweep of this low, in between this, and my stop would have been there because I don't want the market to reverse below this breakout candle. Okay, that's on the lower time frames, but it's understandable, right? This is the origin of the move. You do not want it to return to the origin if it is actually bullish in such a nice uptrend. And yeah, this is a nice uptrend regardless of what you might think. Okay, so for me, the first target is above the black line, which is what? 20.790. Where's that? Okay. So 20.790 is my first target. Somewhere around there is my first target. It nicely lines up with the previous week's mid range. And target number two is basically anything above the previous week's high or a new higher high. So yeah, that's about it for NASDAQ. This is the long I wanted to discuss. What are we trying to do? So we're basically trying to say that this deviation that looks very obvious is not that obvious. And traders who have gotten short there, they've gotten short there, are about to find out. That's it. The market could definitely go there, and we could take a -1 hour on our trade, and that's totally fine. So that's it for Nasdaq. I'll move to oil. I've been crying oil since last 3 weeks now. What's so nice about oil? Well, I don't know. It just looks a really nice buy there. Okay, let's have a look at the price action chart. Oh yeah, that's my new entry by the way. So my stops are actually there. So again, it's the same logic, right? But on the lower time frame. Have a look at this pattern again. Three white knights, breakout, another one. What these candles signify is that there is a significant gap. Let's say from there to there. Okay, there's a significant liquidity gap. When I refer to a gap, what do I actually mean by that? So to me, gap is trapped traders. Okay, so these are basically traders who were, let's say, uh, short from there. That's a gap fill. Who could have been short because they think that this is a bogus high and it is going to go down. And yeah, traders who were basically short from there as well, who had their stops in there. Okay, it might have not triggered or they might have not closed the trade yet because the market went straight up without giving any kind of a retest to the base from where it broke out from. So generally, these kind of gaps, I would prefer for them to not get filled, and that preference is my stop loss. Okay, so not this gap, the gap between this candle and this candle is something I do not want it to get filled. When I say filled, I don't want the price to come all the way down there because this gives the traders who were short, let's say there or there, to close their positions if they're already not. Okay, and more than that, it is, think about it, if you're actually bullish after accumulating for so long down there and you've done a breakout in where you've left a gap, why would you want to reverse that gap again? I would be very concerned as a buyer if the market decides to come back down there. Then to me, it's basically taken out that high, it's created a deviation as going back down to make a new lower low. And that could definitely trigger a lot of liquidity because this base has been holding the market down for quite a lot of time now. So September is where we had the bodies of the candles formed and market tested the bodies. It's been holding since September. So if the market breaks below this low, 67 is basically 67. If it breaks below 67, it could probably go and take out these lows as well below 65 or 65.6. Yeah, I've talked a lot. TLDR of what I've said is basically that's my entry. In there is my SL. Not there actually. There's my SL. That's my entry. And I expect oil to move up this week. It might not move up and might continue to chop. That's totally fine. But that's the idea behind the long. And the long was basically triggered after the market took out this kilo. Okay. Why is taking out a kilo important? Well, this is Ichimoku, so I cannot show you there. Yeah, I can show you there. Because we are sitting on a support level. Because we are sitting on such a key support level, the market taking out a kilo is actually a trigger for me to go long. Okay, that's about it. And overall, I'm actually bullish on oil if the war picks up, which morally it shouldn't, but monetarily it should. Then I expect oil to go up. Okay, so that's the reasoning behind the long trade on oil. I'll take a quick look at the S&P actually, because S&P has similar pattern to NASDAQ. Again, same thing, right? So people expected the market to deviate there. It didn't. Made a new high. They said, all right, it's overextended, so it's going to deviate there. Fine. It did. Right? Look at that. Lows holding. Now they're like, all right, final. This one's final, right? Triple swing. Yeah. The lovely phrase. Triple swing, triple stop. Fine. Now we are going to deviate and make a lower low. I don't think so. So I'll go long, right? If you don't think that something's going to happen, if something very obvious is going to happen, you counter trade it, right? You counter trade these people who have been expecting the market to sell since I don't know when. See, this is 2024, and this is where all of the fractal gurus predicted a big sell off, right? They were like, all right, so there's a fractal which says that once the rate cuts happen, we are going to go down, right? Yeah, like we're doing that. So it's not doing that, right? It's not doing what the fractal gurus are pointing at. It's only following the trend. Once it forms a low, it loves holding on to it. Yes, sometimes it will take out liquidity below kilos, but that's fine. That's market, right? You have leverage, so expect the lows to be swept. Expect liquidity to be taken. So same logic. We are actually counter trading all of the trading gurus who are predicting a deviation after a new higher high. So yeah, that is a valid long entry. Again, same pattern. Three white knights. You expect the market to not go below this, or rather, I would say I do not expect the market to come uh, below, let's say, this area of the monthly open, right? If anything, market should reverse from there. Anything below there is a concern for the longs. So yeah, that's it from my side. I've explained the long reasoning on NASDAQ, the long reasoning on oil as well. That's about it. Thank you.